Welcome to Breaking News to Trading Moves. Today we're looking at a specific transaction in the biotech sector that really has the market talking.
Yeah, it's a definitive move for sure.
Definitely. So Gilead Sciences, that's ticker GILD, they have officially agreed to acquire Arcellx, ticker ACLX.
Right, and the numbers here are what really jump off the page. We are talking about a deal size of up to $7.8 billion.
Yeah, $7.8 billion. That is a substantial check to write.
It really is.
And at the heart of that entire figure, that entire $7.8 billion, is basically a single asset, right?
Exactly. It's anito-cel.
Anito-cel,
Yeah.
which is a sorry T therapy for multiple myeloma.
Right. And our job today is to look strictly at this headline, look at the numbers and the market movements. We want to identify the actual winners and losers clearly for you without any exaggeration.
No hype, just breaking down the actual mechanics of the trade.
Exactly.
So let's start with the specifics of the deal structure itself, because I think it tells us a lot about how Gilead actually used this asset.
It does.
They are paying $115 per share in cash for Arcellx.
Right. So that $115 figure, that is the base. It represents a premium over the previous closing price, obviously.
Naturally.
But there is another layer to this deal that you really have to note. There is a contingent value, right, attached to it.
The CVR.
Right, the CVR.
And that's an additional $5 per share, correct?
Exactly. That extra $5 is tied specifically to sales milestones for anito-cel.
Okay, so it aligns the incentives.
It does. It bridges the gap.
Yeah.
If the drug performs commercially the way they hope, the Arcellx shareholders get that extra payout.
Which bridges that valuation gap between what the seller thinks the drug will ultimately be worth and, well, what the buyer is willing to guarantee upfront in cash.
Right. It effectively keeps the Arcellx team, or at least their shareholders, invested in the commercial success even after the deal officially closes.
Makes sense.
But
looking at Gilead, ticker GILD, why are they making this move right now?
well, it really comes down to their portfolio mix. Gilead is doubling down on oncology.
Because they are facing pressure in other areas of their business.
Exactly. Sales of their COVID-19 treatments are declining.
Which, that was expected as the pandemic waned.
Of course. But they are also looking at approaching patent cliffs for their legacy viral drugs.
Right, the HIV portfolio and things like that. So they need growth.
They desperately need growth. And they need it in a sector that commands high margins.
And oncology offers that.
It definitely offers that. And this acquisition gives them full control of anito-cel.
Which is key, right? Because they were already partnered on it.
They were. But a partnership means splitting the revenue.
And sharing the decision-making.
Right. By acquiring Arcellx outright, they just take full ownership. They capture the entire economic value of the therapy.
And they control the manufacturing and the commercialization strategy completely.
Well,
no more running things by a committee with a partner. Let's look at the timeline, though, because I think for you listening, you need to understand that investors can't just expect revenue from this tomorrow.
no, absolutely not. Anito-cel is currently under FDA review.
Okay, so what is the date we're looking at?
The expected decision date is by December 23, 2026.
So investors are marking their calendars for a specific regulatory decision down the road.
Right. And regarding the actual financials, when this starts to add to the bottom line, that is an even longer-term play.
How long?
Management and analysts expect this deal to be accretive to earnings per share, or EPS, in 2028 and beyond.
2028. Okay, so it is very much an investment for the latter half of the decade.
Yes, but to be fair to Gilead, they aren't buying into a purely speculative market here.
Right. The market for multiple myeloma treatments is already very established.
It is what you'd call a blockbuster lane. The demand is proven.
Give us an example of that demand.
Sure. Look at the primary competitor, Carvykti. That comes from Johnson & Johnson, ticker JNJ, and Legend Biotech, ticker LEGN. That drug generated approximately $1.9 billion in sales in 2025 alone.
$1.9 billion.
Yeah.
Wow, so that really validates the total addressable market.
It absolutely does. The patients are there, the clinics know how to administer it, and the reimbursement structure exists.
The infrastructure is ready.
Precisely. The real question is whether anito-cel can capture a meaningful piece of that existing market.
Which brings us to what we call the swing factor. Because it isn't just about getting approved, it is about where in the treatment line it actually gets used.
Exactly. If it is approved, and if it eventually expands into earlier lines of treatment, It completely changes Gilead's growth profile.
Right, because right now, these CAR-AT therapies are often used only after a patient has failed multiple other treatments.
Yeah.
They're kind of a last resort.
Right. So moving it earlier in the treatment protocol massively increases the patient population.
Which creates a new, reliable revenue stream to replace those older viral drugs falling off the patent cliff.
And zooming out for a second, it also signals that Big Pharma is fully willing to pay up for late-stage oncology assets.
Right, they value that platform optionality.
Especially where they already have a working partnership. They get to look under the hood before they buy the whole car.
Let's move to the winners and losers. We should break this down carefully so you can map out the trades. Let's start with the most obvious winner, which is the target company itself.
Arcellx, ticker ACLX, is the primary winner. The shareholders receive a premium.
The stock essentially moves toward that acquisition price and sits there.
Right. It is a clear liquidity event for them. Event-driven funds will rotate into this as a clean cash deal.
And we should also include Gilead, ticker GILD, in this winner category, at least specifically regarding the strategic logic.
Strategically, yes. Securing a late-stage asset in a high-growth area like multiple myeloma is a necessary, smart move for their overall portfolio.
Assuming the execution is sound.
Always assuming the execution is sound.
Now, there is another group of winners that I think often gets overlooked by retail investors, but it is absolutely vital to the whole operation, the supply chain.
Oh, this is a great point. Cell therapy manufacturing is notoriously complex.
It's not like stamping out a traditional pill.
Not at all. It involves intense cold chain logistics, strict quality systems, and really difficult scale-up processes. You are literally dealing with living cells.
So when a massive company like Gilead commits to commercializing this at scale, it immediately drives demand for the specific suppliers who handle that background work.
It does. It increases the volume of business for contract manufacturing companies. We look at names like Catalent, ticker CTLT.
Because they are heavily involved in providing that exact type of infrastructure.
Exactly. And you also have to look at the equipment providers.
Right, the picks and shovels of the biotech gold rush.
Exactly. Companies like Thermo Fisher Scientific, ticker TMO, and Danaher, ticker DHR.
What exactly are they providing for CAR-T?
They provide the physical bioreactors, the specialized filtration systems, the testing kits. Acceleration in the deployment of any high-OT therapy is a net positive for their order books.
It is a classic infrastructure trade. They benefit from the broader industry growth, regardless of which specific drug wins the market share battle.
As long as the total volume of cell therapy increases, they win.
That is a solid angle. Now, let's look at the broader sector, the other oncology-focused biotech companies.
This is what we call the valuation reweight.
Right. Because when a deal happens at a premium like this, investors immediately start scanning the market for other companies holding similar assets.
It increases expectations for follow-on M&A across the board.
It lifts the whole sector.
You might see positive sentiment moves in companies like Moderna, ticker mRNA, which is actively expanding its oncology pipeline.
And Bristol-Myers Squibb, ticker BMY, fits in here too, right?
Bristol-Myers Squibb, ticker BMY, is a unique case. They have a very diverse portfolio.
Right.
But as a holder of existing oncology assets, their overall valuation could see support from this Gilead deal. It basically validates the underlying value of their own holdings.
Makes perfect sense. Let's look at the other side of the coin now. Who are the actual losers in this deal? The direct competitors come to mind immediately.
Naturally, if anito-cel comes to market with a better safety profile or better efficacy, the incumbents face a real challenge.
They face immediate pricing pressure and a potential loss of market share.
Johnson & Johnson, ticker JNJ, is the primary incumbent here.
Right, with Carvykti.
Yes. And their partner, Legend Biotech, ticker LEGN. If Gilead executes well with their massive commercial engine, JNJ and Legend face a much stiffer headwind.
And we have to mention Bristol-Myers Squibb, ticker BMY again.
Yeah.
They appear in this loser category as well.
They do. They have their own CAR-T therapies on the market.
Yeah, so wait, they are a winner and a loser.
Yes. While the valuation of their pipeline might look good on paper because of the M&A premium we just talked about, practically speaking, they are about to face a very well-funded, aggressive competitor in Gilead.
The marketing battle for doctors' attention is going to be intense.
It will be very intense.
Now, another category as losers is the large-cap biopharma companies that are currently shopping for acquisitions.
This is just the cost of doing business going up. We just saw Gilead pay a hefty premium.
Which resets the expectations for every other seller out there.
Exactly. Future M&A just became more expensive for other buyers.
So if you are a buyer sitting on cash, the price of entry just went up.
It affects companies like Pfizer, ticker PFE, and Amgen, ticker AMGM.
Because they are likely looking for growth assets to buy as well.
Right. But the biotech startups they are talking to are now going to point to the Arcellx deal and demand a similar premium.
Which means Bristol Myers Squibb, ticker BMY, is actually in this bucket too.
Yes. If BMY was planning to buy more external assets to bolster their pipeline, those assets just got marked up.
That is a tough spot. Now, earlier we mentioned Gilead as a strategic winner, but short-term, the stock might react very differently. We should class short-term holders of the acquirer as potential losers.
We should. Markets very often mark down the acquirer immediately after a big deal is announced.
Because there is immediate uncertainty.
Right. Will the FDA approve it on time? Will the commercial launch go smoothly?
Plus, like we said earlier, the actual return on investment is years away. We are talking 2028.
It becomes a pure show-me story for the market.
And it involves a large cash outlay right now.
Exactly. Another name that gets dragged into this negative sentiment is Regeneron, ticker REGN.
Really? Why Regeneron? They aren't in this specific deal.
They are another large player facing heavy scrutiny on capital allocation.
Ah, guilt by association.
Sort of. When investors see one big pharma company spending heavily with a long timeline for returns, they start looking critically at peers like Regeneron.
They wonder if Regeneron will make similar long-shot moves or if they are actually allocating capital efficiently.
It brings the entire capital allocation strategy into focus across the whole large-cap biotech board.
Okay, let's talk about the actual trading behavior you should expect to see on the screens.
For Arcellx, ticker ACLX, the behavior is standard for a takeover target.
The stock trades up toward the offer price.
Right. After that, it moves strictly based on news regarding regulatory approvals or financing related to the close. It effectively sits just a few cents below the offer price until the deal actually closes.
And for Gilead, ticker GILD.
Gilead will trade based on the price they paid versus the fluctuating investor confidence in the drug itself.
So it will be highly sensitive to any FDA updates.
Very sensitive. If there's a delay in that December 2026 decision, the stock will react immediately.
You also advise keeping an eye on the myeloma complex, right?
Yes. It is really important to watch the whole group as a single ecosystem. Any new data regarding anito-cel, whether it is safety data, efficacy data, or even manufacturing commentary, will move the competitor stocks.
So news about Gilead's drug directly moves the stock for Johnson & Johnson, ticker JNJ, Legend Biotech, ticker LEGN, and Bristol Myers Squibb, ticker BMY.
Precisely. If Gilead releases a statement saying their manufacturing process is faster than expected, Legend Biotech stock might drop that same day because investors anticipate they will lose market share.
It is entirely interconnected.
It is.
Okay, to summarize this for everyone listening, we have a massive $7.8 billion acquisition. Gilead's buying Arcellx specifically to secure anito-cel.
The clear winners are the Arcellx shareholders locking in a premium and the supply chain companies like Catalent and Thermo Fisher who get more volume.
And the losers are potentially the incumbents like JNJ and LEGN who now face a very aggressive new competitor.
Exactly.
It really leaves you with a broader question to consider. Does this specific deal signal a rush of big pharma M&A in oncology before other patent cliffs fit?
And does the premium paid here set a new, higher floor for all future biotech deals across the board?
That is something you should definitely consider as you watch the sector trade this week. A lot to monitor in the coming months. Before we close, we need to read the mandatory disclaimer.
This is not financial advice or buy or sell recommendations. This is purely the opinion of the author.
Thanks for joining us on Breaking News to Trading Moves.